Welcome to another video in the Order to Cash playlist. In the video today, I will explain the free of charge sales process or FOC sales. And this is a process we use to send the free products to our customer either as a compensation because of damaged materials or as samples or for any other reason for which we want to send some items to the customer without charging him for the price. This process requires a specific configuration in SAP S/4HANA. In the video today, I will explain the most common business requirements we get as SAP consultants when working on this process. So after watching the video, if you find that you have other requirements that I did not explain, then please let me know in the comments and I will do my best to create another video explaining the other requirements and also to include them in the SAP S/4HANA demo and also the configuration demo. So after the video today, I will follow this with other videos demonstrating the process on SAP S/4HANA and also demonstrating the configuration. The objective of this video is to explain in details the different business requirements we get when working on this process during our SAP projects and also to demonstrate the different accounting entries included in the process in the different business cases. The free of charge sales process is very similar to the standard sales from stock process that I already explained in the playlist. I will leave you a link here to the other video. So the process starts like any other sales process with the creation of the sales order. And in the sales order, we have our different pricing conditions. So we can see the sales price of the item and any discounts, surcharges, and taxes. And as a business requirement for free of charge sales, we want to have the sales price followed by a 100% discount. So for example, let's say we want to send 100 items of our product to the customer and the price per item is 10 EUR. So the total is 1000 EUR. In our sales order, we want to see 1000 EUR as a sales price followed by negative 1000 EUR as a sales discount. So we have a net of 0, so the customer doesn't have to pay anything. This is the first requirement. The second requirement is sometimes we have also sales taxes included in the process and we want to charge only the sales tax to the customer. In this case, in the sales order, we also want to have a sales tax condition, and this condition must be calculated on the price before the discount. So in our example, the total price is 1000. Let's also say we have a sales output tax of 10%. So in our sales order, we want to see a sales tax condition for the value of 10% multiplied by 1000, which is 100 EUR. After creating the sales order, we proceed to the next step, which is creating the outbound delivery and posting the goods issue. And in the goods issue, we have an accounting entry. In the case of the standard sales process, the accounting entry is a debit to cost of goods sold and a credit to the inventory account. But in free of charge sales, here we have a third business requirement, which is to debit a different account than the standard cost of goods sold. So for example, we want to debit an expense account that we call free of charge cost or any other name that you want. So we want to debit this account instead of the cost of goods sold account. So the financial entry will be a debit to free of charge expense or free of charge cost of goods sold and the credit to the inventory account. After posting the goods issue, we have two options. Either we proceed and we create a billing document or we end the process here and we don't create a billing document. And this depends on the business requirements. So now I will give you the most common requirements based on which we can choose how we will proceed with the process. So the first requirement, if in our business process we use costing-based profitability analysis, I have already created a full playlist explaining profitability analysis, the difference between costing-based and accounting-based and the margin analysis. So if you don't know what is this, please watch the margin analysis or the accounting-based profitability analysis playlist. I will leave you a link here. Now let's get back to our process. So if we are using costing-based profitability analysis, this means that the profitability analysis document is only created when we post the sales billing document. So in this case, we have to create the sales billing document in order to update the numbers in profitability analysis. But if we are using accounting-based profitability analysis or margin analysis, this means that any accounting entry we post is automatically transferred to profitability analysis, which means that our goods issue accounting entry has already been updated in profitability analysis. So we may not need to create a billing document. So we can end the process after the goods issue. But again, there can be other business requirements. Now, a third case is if we have the business requirement to send a billing document to the customer, even if it is for a zero value, then we must create a billing document in order to print it. But if we can end the process, if we don't have the business requirement to print the billing document, then we can end the process here. Another case is if we have a sales tax in the process. As I explained in the sales order step, some customers ask for sales tax to be included in the free of charge orders. In this case, we must have the billing document because the sales tax entry is only posted with the sales billing document, and also we need a billing document to print to send to the customer so he pays the value of the tax. Now I will proceed with the process assuming that we have to create the billing document in order to show you the accounting entry. So after creating the outbound delivery and posting the goods issue, we post the billing document. And here we have the accounting entry. In the case of the standard sales process, the accounting entry is a debit to accounts receivable to the customer account and a credit to sales revenue. And if we have sales taxes, then we also have a credit to output tax. Now, in the case of free of charge sales, we have also different cases based on whether we use the sales tax or not. Now, if we are not using any sales taxes, then the accounting entry will be a credit to the sales revenue, and a debit, we cannot have a debit to the customer account because the customer is not going to pay anything. So instead of having the customer account in debit, we have the sales revenue account again. So we have a debit and a credit to the sales revenue account. So the net impact on sales revenue is zero because in this process, we don't have any sales revenue. Or in some other cases, the customers ask to have a debit to a separate expense account, not the sales revenue. So in this case, we will have a debit to free of charge discount expense, for example, and a credit to sales revenue. In case we have sales taxes included and we want to charge them to the customer, then the accounting entry will be a debit to the customer accounts receivable for the amount of the tax only, and a credit to output tax for the amount of the tax. And then again, we have the same two lines I just explained. So we have a debit to sales revenue and a credit to sales revenue, or a debit to free of charge discount expense and a credit to sales revenue. And this is it. This is a summary of all the different business requirements I received in the free of charge process. If you have any other requirements that I did not mention, then please leave me a comment. It will be very useful to me and very useful to everyone to explore the different business requirements before we actually face them in a real project. So leave me a comment with any other requirements you have. In the next video, I am going to demonstrate all of this on SAP S/4HANA. So I will show you the free of charge sales process end to end with the different business cases that I just explained, and I will also show you the different accounting entries. Also, all the configuration steps needed for this process have already been updated to the Elite documents library. So if you open the order to cash configuration document, you will find a separate section for free of charge sales where you can find all the different configuration steps I did in order to prepare the system for the demo, so you can follow them in your system in order to be able to test the process yourself. Thank you for watching, and I'll see you again soon.